And it's day 4 of the trading week before Christmas. Good morning, good evening, wherever in the world you're watching from. It's Business Morning coming to you live from Channels HQ right here in Lagos. First off, let's get the top stories that set your agenda now. The domestic currency depreciated by 1.15% to close at 854 naira 61 kobo to the dollar. The close of business as yesterday. This represents 9 naira 73 kobo loss, about 1.15% loss on the local currency or depreciation compared to the 844 naira 85 kobo registered day before. The intraday high recorded was 1,214 naira to the dollar, while the intraday low was 700 naira to the dollar, representing a wide spread of 540 naira to the dollar. According to data obtained from the official NAFEM window, forex turnover at the close of trading was $181.3 million, representing a 21.45% decrease compared to the previous day. And in a bid to halt the depreciation of the naira, the House of Representatives is seeking to use the Chinese yuan as an official foreign exchange reserve currency alongside other major international currencies for conducting business transactions in Nigeria. This follows the adoption of a motion moved by Honorable Jafaru Gambo Aleko from Bauchi State at the plenary yesterday. The lawmaker hinted that the global economic landscape is evolving and international trade dynamics are shifting, with China assuming a leading role in global trade. He added that the International Monetary Fund proposed diversification of foreign exchange reserves for central banks of developing countries, including Nigeria. And Nigeria's total external debt stock declined in the third quarter of this year to $41.59 billion as of September 30th, down from $43.16 billion reported as of June the 30th. According to the latest report released by the Debt Management Office, the $1.57 billion decline in the debt figure is due to the redemption of Nigeria's $500 million Eurobonds and a first principal payment of $413.85 million of the IMF's $3.4 billion loan obtained during the 2020 COVID-19 period. However, the DMO says the country's total public debt, which comprises debts from the federal government and 36 states, as well as the Federal Capital Territory, increased by 0.61% quarter on quarter to 87.91 trillion naira, up from 87.38 trillion naira. Well, in what may be considered a Christmas and a New Year gift, the federal government announced free rail transportation and a 50% discount on road transport by luxury buses across Nigeria for the Yuletide celebrations. This was disclosed by an interministerial committee led by Minister of Solid Minerals, Sir Dele Alake, who said air travel was excluded from the initiative because this intervention is targeted at the masses. This special presidential intervention is to commence today, December 21st, up to January 4th, 2024.
Because of socio-gravitational pull of the period, which transporters always cash on to increase fares astronomically. In recognition of the economic situation of the country, which the president is working hard to turn around, President Tinubu wants Nigerians to be able to travel within Nigeria to wherever they want to go to meet their loved ones without the extra burden of paying exorbitantly for interstate public transportation. It is in this wise that the president is announcing through us that beginning from tomorrow, that's the 21st of December, Nigerians willing to travel can board public transport via minibuses, luxury buses at 50% discount of current cost, and all our train services on the routes the trains currently serve at zero cost to and fro on their travels this holiday season. This special presidential intervention will commence tomorrow, Thursday, December 21, and it will end on January 4, 2024. The president has already directed the police department and the Department of State Services, the military, and all other security agencies to work collaboratively to ensure the holiday period is safe without any security breach in any part of the country.
Yeah, so definitely the intervention actually starts today, Thursday, the 21st, into 2024. That's January 2024. And definitely I hope you all get to enjoy this discount. So go there, travel, and let us know your experience if you're able to get any of these discounts. Well, this week we've been reviewing major industries and sectors in Nigeria. And from the discussion so far, we've seen that the poultry industry and baking industry have been hit hard by the volatility that we see in the FX market. We've had two guests this week from the associations painting a picture of how hard it is for these sectors and the players in that market to actually function and get us cheap bread, at this time, and also cheap eggs, going forward. So today we're going to be reviewing the banking sector in 2023 and get an outlook for 2024. Joining us for this conversation now is Olumide Sole, Sub-Saharan Africa Banking Research Analyst at Festive Research. Great to have you on the show. Good morning.
Good morning. Thanks for having me.
Yeah, so we're seeing major industries and sectors that we track here. We're seeing that they've not had it good, in 2023. But we see that the banks did smile to the bank in 2023, looking at some of their earnings at this time. And we know you recently released a full-year Sub-Saharan Africa Banking Outlook report. Give us some of the major highlights from the report.
Okay, so majorly we saw that for 2023, we saw that bank, like you mentioned, did wonderful. Like they had impressive performance on the back of, firstly, they recorded FX evaluation gains, material FX evaluation gains. Most banks recorded material FX evaluation gains. And the banks that recorded most of those FX evaluation gains are Zenith, UBA, and GT. Recorded about more than 300 billion FX evaluation gains. So that helped to increase their bottom line and even their top line. Also, we also saw that interest income also came in at a very, very recorded significant gains also. As we saw that the loan book of most of our banks were increased, and even the asset size also, which also increased the asset size. So as a result of that, we saw interest income increase for majority of our coverage banks, that's for Nigerian banks, and that's helped to strengthen their bottom line. And looking at, we also saw that the non-performing loans also moderated slightly despite the tough macroeconomic environment. And this is not the major driver for this is that we saw that Nigerian banks are risk averse. That is, their risk appetite is very, very low or very, very conservative. And we measured this using their LDR ratio. We saw that most of the Nigeria banks' LDR ratio is below the minimum requirement of 65% required of by the CBN. So we saw that most of them were around 40 to 45%. That shows that Nigerian banks are not giving out loans as they ought to. So.
Hello, Lumine. Hello, Lumine. Can you hear me? All right. So, Lumine, definitely with the picture you painted there, we're seeing the banks, being risk averse in 2023. That means they're not dishing out the loans, to the real sector like they should, basically.
Yes.
And definitely this will have an impact, on the economy.
Definitely. And it's kind of, the impact is that business will not be able to get loans to be able to finance their business and be able to grow the business as they ought to. But also, we see that banks are also investing in risk-free investments, such as T-bills and bonds, NGM bonds, and things like that, to be able to use those funds to be able to gain, put those funds in use. And also, we also see that the SDF window, that's the standing deposit facility, which is the window where the CBN can keep their excess liquidity and earn something on it, that's earn a percentage on it, a yield on it. And for that, we saw that the CBN has also removed the limit for that window. That's the 2 billion limit for that window. So as a result of that, we also see this also increasing their earning potential. That's for their core banking income looking into 2024.
All right. Earlier this year, there were reports of bank failures in the U.S. Definitely, most analysts blamed the U.S. Fed for most of these bank failures because they were trying to bring down inflation and they raised rates to new highs. That was earlier this year, 8/2/2022. We saw banks like First Republic, Silicon Valley, and others, go down. So looking at bringing it down to Nigeria, we've seen a rate hikes also here in a bid to bring down rising inflation at this time. But it seems the banks here were not impacted. Why is that?
So there are a lot of factors. Firstly, we'll try to examine what happened in the US. Firstly, for the regional banks that failed in the US, their risk management procedure was more aggressive compared to like Nigerian banks, which I mentioned that is conservative. For instance, now we saw that for the that's the Silicon Valley and the likes that failed in the US, some of them were short-term deposit. They were investing their short-term deposit in long-term instruments. So as a result of that, the impact is that when bank runs occur, when they have to meet their obligations, that's when the borrowers of the fund, that's people that deposited the fund to the bank, request for their fund, they now have to liquidate such investment to be able to repay their borrowers. So because of the rising interest rate and how the prices of assets generally, as asset class generally has declined. So by the time they are liquidating the investment, they were liquidating the investment at a loss. So that's kind of what led to the bank failures in the US. Coming down to Nigeria, like I mentioned, I said that the risk management procedure. If you look at the risk management procedure for Nigeria, very, very conservative. They are extremely careful and things like that. So based on that, that was one of the reasons why we didn't experience such in Nigeria. Also, we also have to mention that the fact that even the rising interest rate which we experienced in Nigeria didn't materialize as much as you can see that even the asset yield of the bank they didn't rise to about 18%. And what this simply means is that the rates the banks were giving out loans didn't rise to about 18.75% that the CBN raised the MPR to due to the transmission mechanism that was broken. So based on that's another factor that also helped that Nigerian banks didn't experience such kind of fallout that we saw in the US.
Yeah, and definitely we're still tracking how they perform going into 2024. But digging deep into the balance sheets, of most of these banks, we know, most of the earnings we see there and how big, they got due to the FX revaluation gains, that we saw due to the managed floats there. We see the Naira actually getting as low as 800 in the official window and even touching that 1,000 level. Looking at the growth in EPS, is it reflective of the core performance of these banks?
Yes. It's we can see that for instance now for the balance sheet growth, it was majorly based on the translation effect. That is, the banks have to report in Naira and they also have foreign currency. That's the assets and liabilities in foreign currency. So because of the devaluation, initially they were reporting at 450 Naira per dollar. Now because of the devaluation, they're now reporting at around 700 to 800 levels per Naira. So as a result of that, when they do the translation at the 800 levels, the balance sheet size increased. So as a result of that, we expect this to also impact their earnings, their EPS, because those assets are interest generating, and they generate economic values to the bank. So as a result of that, if the asset size increase, definitely their earnings also increase. So we expect this to trickle down to their earnings, like we have been seen in 2023. We expect this to continue to 2024 for these banks' EPS generally.
All right. Another big issue right now is reports of cash scarcity. At this point, we've seen reports from some POS operators having to increase their charges by about 50% at this time. There were also reports from some of these. We had a POS operator on the show one time, and he did mention that most of these POS operators are being taxed, or there's some levies, placed on them, at this time. We did dig in on that issue, and we've not been able to, get concrete information on these taxes or levies being placed on these POS operators. But we're still digging and checking. And if you're a POS operator and you're being taxed at this time, let us know. But Olumide, looking at this cash scarcity issue, what are you hearing? What are the banks saying at this time?
So for the cash scarcity issue, it was majorly we proceed that the major reason for this is majorly on the back of what this the past administration, that's the former CBN governor, had put in play already before leaving. So we know that December 31st was the deadline that was meant to be the phase out of the old naira notes. So as a result of that, even after the CBN governor has been replaced, or we now have a new CBN governor, consumers and people with cash have definitely been trying to phase out their old naira notes in search of new naira notes. Before the CBN now announced in November, that's in November last month, that the old naira notes still remain legal tender. So as a result of that, because we're now in December, demand for naira notes is now very high because of now for in December period, demand and economic activity is always at its peak. So as a result of that, and like I mentioned before, people are already working to phase out the old naira notes. So people have started depositing their old naira notes in the bank and things like that. So as a result of that, to be able to withdraw back those old naira notes back into circulation is one of the major reasons why we're seeing this cash crunch now. But it is not as severe as we saw in February or initially or January when the whole issue escalated.
So looking at the issue now, we know definitely people are gonna want to travel to the village to go and enjoy the holidays. So is it that most of these people now are trying to get as much cash so that they can maybe go and spend in the village? Because at the end of the day, the channels there in those rural areas might not be so accessible for them. Or there's also an issue of hoarding. They say most of these people are hoarding the cash. But at the end of the day, don't the banks have enough cash to dispense?
So for the people going to the village and things like that, like I mentioned earlier, economic activities are at peak now. And it's very, very possible. A person that probably didn't need that cash before definitely needs it now. So as a result of that, so the demand of that for cash has increased significantly. So we are seeing CBN, that's banks trying to meet up with increase their supply for cash during this period. And I don't think there's not enough cash. The banks have enough cash. It's just being able to dispense it appropriately, and the time frame. Because, like I mentioned earlier, a lot of cash has gone in. To release that cash out back, it will take some time. It won't just occur overnight, like so swift. So that's one of the major problems. So to bring out those cash back out to circulation is one of this. But like I mentioned earlier, also the problem is not as severe as we experienced in January or even last year December when the phase out of old naira note officially began.
All right, I guess let's try to reduce our demand for cash at this time. But let's look at rates now. We've seen major economies now. There's chatter about rates, rate cuts, coming in 2024 for most of the developed economies. We're seeing inflation rates also going down. But here, it's a different picture. We're still seeing inflation rising at this time. Before I let you go, what are you seeing in 2024? I'm talking about rate hikes in Nigeria.
So for rate hikes in Nigeria, like we saw in the CBN governor address at the bankers conference, we saw that the CBN governor mentioned that there will be inflation targeting, and also that simply means that what the CBN would definitely unleash every of its arsenal to bring down inflation. And like you mentioned now that inflation is on the rise, yes, in Nigeria. So people, those for other economies that we're seeing that we are forecasting that we'll see rate cuts, is because inflation is moderating in those economies. But here, inflation is accelerating. So we don't see any rate cuts for now for Nigeria, at least looking into next, that's H1 2024. We expect rate increase. We expect the CBN to embark on monetary tightening, further monetary tightening, to be able to curtail inflationary pressures. For inflation data that came out in November, we saw that inflation was up to about 29%, and we even expect it to be higher for December. So definitely, the CBN has to unleash every of its power or mercenaries within its control to be able to bring down inflation to a very bearable state.
All right, so much to look out for in 2024. Definitely, we're hoping for some kind of a soft landing for the economy going into 2024 right here in Nigeria. Thank you so much. It was great having you, Olumide Sole, Sub-Saharan Africa Banking Research Analyst at Festive Research. Thank you for coming on.
Thank you for having me.
All right, we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. Welcome back. Well, breaking news reaching us right now. Definitely, we've all been looking forward to December for a commencement of one of our refineries. And we've got information now, the Port Harcourt Refinery as recommencing operation in line with the federal government's promise to ensure production of refined products begins at the facility. They did say it will begin in December. And now, we have information that it has commenced operation right here, talking about the Port Harcourt Refinery. The development comes months after the Minister of State for Petroleum, Senator Heineken Lokobiri, said in August that the Port Harcourt Refinery will commence operation in December 2023. Well, in March 2021, the Federal Executive Council approved about $1.5 billion to rehabilitate the Port Harcourt Refinery. Accordingly, data shows that the Nigerian government has spent about 11.35 trillion naira in the past 10 years on fixing the country's refinery. But now we have information that the Port Harcourt Refinery has commenced operation just as promised by the federal government. We also have the Dangote Refinery that received a second shipment. That was yesterday, I think, or the day before. So now, there you have it. So the refineries looking ready at this point. Port Harcourt Refinery and Dangote Refinery. Let's bring in Oluwatomi Mayowa now, analyst at Financial Derivatives Company. Great to have you, Mayowa. And yeah, so information reaching us now is that the Port Harcourt Refinery has commenced operations in December as promised by the federal government. Talk to us about the impact of this. We know we were talking about the Dangote Refinery earlier this week.
Yeah, I would say it's really a good one. It's a good one for Nigeria, considering the fact that, the price of fuel has actually increased, and the environment, there's been a lot of uncertainty in the environment. And I would say, first of all, this helps to improve the credibility of the government, because over time we've seen that people have lost interest in what the government is saying. As when this news came in that we're going to see the Port Harcourt refinery come into play in December, the people's belief were actually people believed it less, and now seeing that this is actually coming to play, I think it paints a better picture, even for Nigerians and even for investors, actually. And then definitely adding to the production, to the Dangote production of refined products, it helps to also boost supply of refined petroleum. And, this will definitely, we'll see that it will reduce the downtime, like I said the last time, of, having to, go to Apapa, imports, the downtime used in importing, the transportation costs and all of that. All of those things will actually decline, since we are seeing this improved supply. And, we might see some ease in prices, looking at all of this thing coming into play. So I think it's a very good one for Nigerians. And then for also investors, it boosts that confidence in the environment, that, okay, we're saying the government is saying this, and then it is really coming, it's not coming to reality as they have said. So I think this is a very good one for Nigeria. It's a good start.
Right, definitely a good start. And even though we've heard many times that even though we refine, it doesn't mean the cost of PMS is going to go down,
yes,
drastically. But
yes,
say,
definitely.
you did say that you might get maybe 100 naira, shaved off,
yes,
from how much
yes.
we're paying. I told
Because
you I'll
of the
take that,
input
but
supply
I want
and
more. I
reduction
want
in
more than
landing
100
cost.
naira shave off.
I think because the landing cost, the transportation cost of this of fuel or refined petroleum is actually going to reduce significantly. That's why I might see that is. And don't forget, like I said, one thing we must also know is that the Port Harcourt refinery, it's when you compare it to the production capacity of what the Dangote is doing, it's sort of less, because what you would get from, for example, if you put about 1 million barrel in the Dangote refinery, you might get almost fully that amount. Let's say 950 thousand barrels of refined petroleum. But when you do that in the Port Harcourt refinery, you might not get up to that amount. So it's just helps to ease the supply constraints in terms of refined petroleum. So it helps, it paints a better picture, but not there's still a need for more of these things that we're seeing coming up, so that we can see that increase in production. So I think it's good. It's a good start, but it doesn't solve the problem totally.
But at least we've all been clamoring for Nigeria to refine
Yes,
its oil,
yes,
and
this is
definitely
very good.
it's definitely a good sign going into 2024 that these refineries are coming on stream. But another news now, we see there's a forecast. We see Nigerian export earnings from oil is expected to fall by about 6.3% to 40.69 billion. That's what they're seeing in 2023. Talk to us about it.
Yeah, let me start by talking about the global oil and oil markets. Like I said on Tuesday, that it's been quite volatile recently, and that's because of the increased uncertainties in the air that has actually been exacerbated by the geopolitical tension. And we've also seen supply cuts, production cuts from the OPEC plus. And however, we're seeing that the US is trying all its best to ensure that they put a floor on oil prices by actually ramping up oil production. And and that's what we saw this week. Even though we saw oil prices increase to about $80 per barrel, as a result of the tension, we saw that it eased recently this morning, and that's because we saw that the U.S. crude inventory actually rose by 2.9 million barrels, last week, compared as against an expectation of a 2.3 million decline actually, last week. So we're seeing that the US is ensuring that they put a floor on oil prices, and we're most likely going to see that next year. The US will continue to try all its best to, despite the production cost cuts from the OPEC Plus, the US will continue to ensure that they ramp up oil production so that oil prices would actually not go so high. And then because of, that once oil prices are actually high, that would actually, raise inflationary pressures. So they are trying all their best. So bringing it down to Nigeria, we're seeing that Nigeria's export earning from oil proceeds will actually decline by about 6% to 40.7 billion dollars, and that's because when you look at the average oil price in 2022 and when you look at the average oil price now, we've seen that oil price has actually declined. As of last year, I would say that the average oil price as of last year was about $100 per barrel. Now we're having something at about $80 per barrel. So that's why we're seeing that decline. Irrespective of the fact that Nigeria's oil production has increased, marginally. The decline in the oil price is actually reducing Nigeria the oil proceeds from the external earning from oil proceeds. So that's why we're seeing that decline, and we might see an improvement next year in 2024 as a result of a further increase in our oil production and the fact that oil prices are still going to remain high in 2024.
Right, definitely looking out for how the oil market progresses into 2024. But now it's about 3 days to Christmas, and definitely I'm sure a lot of people now will be trying to shop for Christmas at this time. How are you seeing demand, right there in the markets and commodity prices?
Really, food prices are actually increasing at a faster pace. And one would think that because the disposable income have actually declined, you might see less demand, but actually, we're still seeing prices actually increase significantly because, everybody would definitely want to shop for Christmas, right? So we've seen rice, I mentioned that a bag of rice rose to about 67,000 naira that's the long grain rice from 60,000. We saw that it actually, within the space of 2 days, it actually increased again to 70,000 naira per one bag. That's per bag. So and we are also seeing the price of a live turkey actually increased significantly. When you look at the price as of last year, it was trading about 45,000. Now it's currently trading about 55,000 naira. So that's the big one. So we are saying that prices are actually increasing at a faster pace. We might see food inflation actually rise to about 33% again in December as a result of this festive period. So prices are really increasing at a faster pace.
Yeah, you did talk about turkey. They were also seeing the price of chicken rise. So maybe for me, I might be giving fish some love this time going into Christmas. Thank you so much.
There's nothing. There's that enjoyment that people want to get by wanting to. But we might see more demand for frozen turkeys like that, just so that they can, since the price of those live turkeys have actually increased, so they might see more demand for frozen products.
Right, and I prefer live to frozen, and definitely I'm going to be looking for live. Thank you so much, Oluwatomi Mayowa, analyst at Financial Derivatives Company. Compliments of the season.
Thank you very much. Same to you.
All right, so let's get a check on the markets now. A market that's reaching new levels, hitting new highs at this time, and we have very own Willie Bong to bring us the details. We did hit a new high, talking about the equities market, 73,000 level.
Yes, Ladi, 73,000 level.
It just keeps going, 40 trillion.
We don't even know how high it's going to
cap.
get. We didn't even think we're going to hit 40 trillion naira this year. But
I was looking at maybe sometime,
wowing us with this incredible and phenomenal moves in the market. I'm sure those penny stocks, those, dark horses in the market that you don't even think are going to, make it, you see that uptake and investors, being bullish on them and say, I think they've got potential. And so we see that movement, that trajectory in their price movement. And we're going to see, I think we're going to get better things
So you're
ahead.
telling me in this market, investors are not trying to take profit for Christmas, or they already have the money they need to spend?
I think they're seeing potential, and they're seeing maybe more returns for their money. But when compared to the fixed income market, where yields are not really trending as high as they would want it to be, especially with inflation at 28.2%, and they're seeing, the yields in the fixed income space are barely below 16%, and you're thinking, you're putting your money for long term, for the long haul, how much returns are you going to get when if you put it in the equities market, you're going to get a faster return, get better returns for your money, and just think about it.
So the investors don't care about spending for Christmas at this time.
I think
they want to beat inflation.
They want to beat inflation
going into 2024.
and going to 2024. They got and January is here. School fees have to be paid.
Oh, school fees.
We're back to that.
Don't remind me.
And so the equities market sustained its bullish streak this week. It's kicked off the week on a very strong note. Well, maybe marginally, but it was still bullish. But we're seeing that momentum, being sustained throughout the week up to yesterday, which was Wednesday. Today's Thursday. We're going to see how the market is going to perform. But we saw bargain hunting in Airtel Africa, which was up 4.9% yesterday, and that led the all-share index to climb 1.28% to close at 73,397.71 points. That's a milestone that the equities market all-share index hit yesterday. And we also crossed the 40 trillion naira mark. We had a 508 billion naira increase in value yesterday. Now let's look at the activity chart and see how that performed yesterday. We also see a green, 34.88% up, 554.64 million units, valued at 12.83 billion naira. That was 84.62% up yesterday, and we saw a 15.14% uptick, 4 deals, and that's why we have it above 7,900. But we're going to bring in now Mr. Kofi Garba, is the CEO, APT Securities Limited, to give us more insights, more background as to what to expect to the market and if we're going to hit more highs. Good morning, Mr. Garba. It's good to have you on the program.
Yeah. Good morning for having me.
Mr. Garba, we've crossed the 73,000 level. Market cap has hit the 40 trillion naira mark. Did you expect we were going to hit that level this year?
We did not expect that, but we are not surprised. Because for the first time in the history of Nigerian capital market, after swearing the president, the market keep on rising month by month, week by week, day by day. Today, most of this 90% of the gain that earned this year earned it after the swearing of the president. And his policy and his friendly with the market attract more. And this tell you that the future is going to be brighter and better than expected. Because the market look at the future. And we are anticipating that this year we are likely going to surpass 2020 performance, where the market gained 53%. We are not surprised to earn that or more than that in this year. And this is the first time in the history of the swearing of the president the market gained that amount. So it's not surprising. And don't forget, ever in the history of the market since 2007, we never had a year where over 40 companies gained 200% and above, and they are still counting. And even the big banks gained more than 150% within this year, within the last 6 months. This is surprising, and it makes it interesting and attract more fund into this market, because that is where you communicate.
So, Alhaji, now thinking about the stocks that have, hit some highs, we've seen Dangote Sugar's share price surging by 258% this year, despite the economic headwinds. Are there other stocks in the market that has made such phenomenal growth in a short space of time?
I think, yes, first for the Dangote and NASCON is for the fact that the two are going to match, and we believe that by the end of 2023, you no longer see Dangote Sugar or NASCON. What you are going to see Dangote Food. And we are all living testimony what happened to Boa Food. Boa Food came in January 2022 at 40 naira. Today it's trading 200 naira plus, gaining more than 500% in 2 years. I believe the Dangote Food, which will be the combination of the Dangote Sugar, NASCON, and Dangote Rice, are likely going to repeat the same also fast. So these are what? Other stocks that have made tremendous gain, Transcorp. You remember Transcorp was trading 1 naira years after years. But since the coming of the cheap penny or $2, who took 5% of the stake, and then the big elephant rise. Today we are talking of 7 naira 70 kobo, and it may close around 10 naira before the end of the year. And this is true because if Regu Power can make it, why not Transcorp Power to make it? Remember, Transcorp Power generates about 1,800 megawatt compared to what Regu do. So if that value translates to Transcorp can pass wherever it is today to a new high. Not only that one, other stocks that have also benefited there in this market is the Mikyo. Mikyo just recently registered to Naira 95 kobo. Today you are talking of 12 Naira. Gaining more than 300% is just less than 3 months. So it attracts more companies are likely going to join this market either now or early next year because they see the wisdom of getting listed. And we believe that other stocks will also benefit because these are not the only stocks that have benefited in this rally. Many other stocks have joined the rally and benefited. Nahapo is one of them. Nahapo, which is trading around 6 Naira today. Nahapo is trading over 22 Naira. Take also the fixing. Fixing was trading around 6-7 Naira. Today it's talking about 17 Naira. The Cadbury is there. Many other stocks have benefited in this tremendous rally, and we expect more are likely going to benefit.
Alaje, we're seeing so many stocks that have driven the market to push the all-share index to this level. We're hoping more stocks come into play, but we've seen other factors that have been playing to this, in terms of corporate governance. And you saw yesterday the NGX had the Made of Africa Awards ceremony with the closing gong ceremony as well. And we saw companies like MTN Nigeria, we saw VFD Group, which just listed on the NGX. We also saw Cardinal Stone Securities and Chapel Hill Denham were big winners at that Africa Awards, which was organized by the exchange. What would you say about this in general? Do you think that this award ceremony, these companies that bagged these awards really merited this, and what are the criteria that were looked at?
Well, the truth of the matter that it short changes in this capital market. If you remember, in the early days, the companies that are always top of the market are those of Stambik and what have you. Today, they are no more. The truth of the matter, it shows that there is reward for the effort. Cardinal is just recently, I can say, is among the baby industry because it just came to the market around 2008. You are just talking about 15 years. But for the last 2 years, Cardinal Stone Security has been #1 and they retained that position 2022 and 2023. And that showed what for the effort. They keep on moving forward. Now they have reached #1 position and they are able to retain it. What will become thereafter, only God knows, because more youngs are coming and this shows challenge for what they can do, others can do better. For the Chapel Hill, we all know it. How many delisting and how many merger that comes through them. So you can see that apart from that, when they introduced the infrastructure fund, and that also added to the flavor of the market, bringing more variety. And Chapel Hill Denham has been one of the houses that are very good in doing that, and it was awarded for that. And we are not surprised for this. What shows that? No matter where you are, if you do, you will be rewarded. Pilot Security was rewarded for compliance. So you can see compliance may not be the top 10, but in terms of compliance, it shows. And the regulator is giving preference to compliance because strictly adhering in the compliance of the rules is #1 that we cannot compromise. Remember, this is the market of integrity, and therefore compliance with the rule is #1 that give priority by the intent, and we really held them for that. Others are also coming, and I can tell you that don't be surprised, next year, 2024, it may be entirely independent because others have seen it, and since this award have started last year, 2022, those who have clicked to that position want to tell you, those who are not there, they want to make sure that they are there, and therefore more competition and better for the market.
Alaji, I just want to say, Ladi mentioned something about profit taking and investors are not taking profits for Christmas. Just very quickly, do you think we would see profit taking kick off today, seeing that the all-share index is that high yesterday?
Look, profit taking is always there because there is traders. But then forget that majority of our investors are long-term investors. And as Warren Buffett said, if you cannot invest in a company for 10 years, he then need to look at it. So institutional investors, especially the PFs and other high net worth individuals, they are not for just short-taking profit. Those who bought Transcorp at 1 naira and take their profit when it was 3 naira, today they are lamenting. So taking profit, yes, you can do it, but mark you. The market doesn't bother whether you take your profit or not. The market is going to do what it's going to do. And arguing with the market will only be a mediocre. Many of those who decided to claim to have taken profit, today they are regretting because you have to talk more money to buy even what you have sold. So yes, taking profit is there and it's part of the playbook of the market, but I can see that maybe for the penny stock. But for most of the solid stock, they have the fundamental that can support their price, especially the banking sectors. Most of them, they are trading a single digit PE ratio, which is far below the average PE ratio of 12 in the emerging market and frontier market. So you can see that our stock are still cheap. And therefore, even if you choose to take the profit, I can tell you that take it with caution before you decide otherwise.
Okay, Alhaji, I know we have a lot to say. We look forward to how the market will close today. Very well, I'll be, holding my reward drink, if the market closes in the the green. Thank you so much, Kofi Garba, CEO, Equities Securities, for joining us on Business Morning and share your perspective.
Thank you for having me.
So, Ladi, I'm just going to be looking forward. I did say this week is going to be a green. I'm hoping they sustain that. If they take profit, please not take profit enough to drop the market, but just, keep it in a balance that, just take some and leave some for the rest.
Take some and leave some. And congratulations, Port Harcourt Refinery commences operations. Hopefully, I can buy fuel cheaper.
You don't have to queue like you did this morning, and you had to get to the filling station and just start queuing for long queues.
Hopefully. Thank you so much, Will, giving us the details from the equities market. But let's check on other markets now. Talking about the crypto market, we see it's a mixture of green and red on the screen, but it's looking more green today. $43,567 for Bitcoin, but Ethereum on the flip side down 0.94%. Cardano is also down, and a couple of other red spots there with Doge, the king of meme coins, also in red. Let's look at the sentiment in the market now. I would say it's still a greedy market, definitely at this point. Yep. Greed, strong greed, 70 points. We've not seen extreme greed yet in this market. Looking forward to when that hits. Let's look at the top cryptocurrencies we track. We see Bitcoin at 8 a.m. this morning, up 1.33%. Ethereum, on the flip side, down 0.94%. We see BNB trying to stay above that $250 level, 1.07%. And we see XRP 61 cents, up 0.65%. So it's still a very, very greedy market at this time. Let's bring in Michael Nnaji now, financial market analyst. Hello, Michael. Good morning.
Good morning, Letty. Thanks for having me on.
Right. It's all about the Bitcoin spot ETF at this point, and we're still seeing a very greedy market right now. But we saw a research from Coinbase showing that the launch of a spot Bitcoin ETF in the United States could cause a shortage of regulated Bitcoin. We've been talking about the good side of a spot Bitcoin ETF, but what are the risks here?
Yeah, the risks are basically, like the SEC said, that the underlying market could be manipulated by so-called Tethers, the fake issued U.S. dollars that are not controlled properly. Therein relies the biggest risk to crypto, is the manipulation that could be present if Tether is not fully backed. And what that could do if Bitcoin ends up turning into a multi-trillion-dollar asset class.
Right, and looking at the ETFs, what are you seeing for approval right now? Is it a sure thing? We're going to get a Bitcoin spot ETF approval maybe in December or January?
Yeah, so the number being thrown around is we're 95% sure that the ETF is going to come in sometime before January 10th of next year. A couple of things that look to be aligning up for that, namely BlackRock, the biggest fund manager in the world, basically caved in, and they shifted their model of basically in-kind in-kind redemption to cash redemption. Obviously, with this change, there comes tax liabilities when it comes time to redemption of the underlying asset. As when they dispose of it, if there's capital gains, the fund has to undertake the payment of that. Versus if they had alternative methods, they could hedge, they could sell the securities, exchange into something else in a more suitable tax-friendly fashion. So this change from BlackRock to list this ETF with a cash redemption is them basically caving in and getting in line with everyone and how they were going to be redeeming the ETF when it comes time for redemption. So that is a good move. Also, as well, the SEC has had a lot of meetings in regards to this ETF. So it's starting to look like it's probably going to be happening. Okay. Also, because the courts have a case where they basically laid out that the SEC needs to go ahead and approve the spot ETF because the spot ETF is just like the cash ETF. The cash futures ETF. It's 99% correlated. It makes no sense that it's not approved yet.
All right, Michael, before I let you go now, very quickly, what's the best strategy for the Christmas trade in the crypto market?
The best strategy is finding undervalued alts that have not left they haven't left the station yet, and getting on board and the 20x, 30x moves that people are known for getting in crypto are still there. And now is the time to get into those coins because if this is truly a bull market, this is just the beginning.
Yeah, because I know the meme coins are taking all the shine at this time. Definitely looking out for what happens before Christmas. Thank you so much, Michael Enaji, financial market analyst. Thank you.
Thank you, Letty.
All right, so yeah, let's look at the top gainers this morning. We see double-digit gains in the market, 25.33%. IOTX, one of the OGs in the crypto market there, 6 cents. Seen a rally there. Ordi, one of the ordinals there, inscriptions. That's $55.79, up 10.26%. Let's look at the top losers counter now. Let's see, HNT Helium, that's topping the counter there. We're seeing some profit taking, 7.16%, down at $8.19. And we see ICP, the top losers counter, and Litecoin, not seeing Litecoin take any shine in 2023, but it's down at $69.54, 1.99% drop. Well, that's a wrap on the program. Don't forget, join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Also visit www.channelcv.com for more updates. And remember, if you must take profit, find the top.